Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, March 13th at about 3 p.m. Eastern. Well, the Federal Reserve will probably cut next interest rates in September, traders bet today, after government data showed inflation by the Fed's targeted measure wasn't quite as hot as feared at the start of the year. Before the data, which showed a 2.8% year-on-year rise in the personal consumption expenditures price index in January, the betting had been for a first Fed cut rate in October. Of course, the Fed meets next week, but general consensus is they won't cut rates at that time. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, as you can see, today when I captured this chart, the SPY was trading at $663.94. That's 5% below the all-time highs set back here in January at $697. Now today the SPY is trading below its 20-day moving average, the red line, which is coming in at about 681, below the green line, the 50-day moving average, which is coming in at about 688. However, thankfully, the 200-day moving average, the black line right here, is still below price at $658. That's where it's coming in today. So we know, and you can't see it on this screen, but we know from the April lows back actually almost a year ago, the SPY made a low in April at that time at 481. And since then, it had been walking up its 20-day moving average, the red line, had been walking up that for almost a year, making higher lows and higher highs until it hit this October high right here. And then the rally started showing signs of exhaustion. As you can see here, this was way down. That hadn't happened in a year, not that low, not that dramatic, I should say, below its moving averages. So it got up here in its October high up to 690. That was a 44% gain off of its April lows. Then the exhaustion came in and it fell down here. The SPY fell down to 652 in November. Then it gained energy, pushed back up here to 689. Then it dropped to the 50-day down here at 671. Then it rallied up to 696 and 697 in January at all-time highs. And then it started trading kind of in a range here from 676 to from 676 to up here to about 697. Started going sideways here, and we thought, well, maybe. But then in the past 2 weeks, it has rolled over to where we are now, again, at 663. That's where we are today, 663. So we do see here that we could have drawn this all the way through, and it's broken down. We could have put a line over here, kind of forming a triangle, but it definitely did fall. And we did ask last week, we said, is the SPY, when we were talking last week, a week ago, we said, is the SPY maybe going to pull into a rest stop here? Well, it certainly has pulled into a rest stop. So now, again, we're down here below the moving averages, below that support at 676. It fell right through that in the last couple of days. So now we are down here. So now what do? We look up here at resistance. Now what was support, this 676, has become resistance. So we also know that, again, the 20-day is coming in here at 681. The 50-day at 6 688, and then we've got this pivot. It's right here at 692, and then up, of course, here to the all-time highs at 697. So there's a lot of potential resistance overhead now. Doesn't mean that the SPY can't get through it, but there's certainly a lot of resistance there. So next week, please do know, of course, that we do have the Fed meeting going on. We have a lot more going on than that. And I'm watching for opportunities. I'm watching for new opportunities. I'm taking note of them. I'm actually jotting them down, but I am not going long yet. I think we've got a little ways to go in this particular mode here. So I'm mostly on the sidelines here. That's for sure. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that closely follows our NASDAQ 100, which is made up of the top 100 non-financial stocks in the NASDAQ stock market. And that, of course, includes all the large cap momentum stocks like the Magnificent Seven, that whole group. Now, when I captured this chart today, as you can see right here, the Qs were trading at $593.13. Now that is 7% below these all-time highs up here, touched in October right here, and then again in January. So we've got a shallow double top here. If it falls through support, it will be a double top, but a shallow one. That's a good thing. We are again trading at 7% below the all-time highs touched in October and January at 637. So now the Qs are also trading below the red line, the 20-day moving average. That's coming in at 605 right now overhead price. 50-day is coming in here, the red line at 613 and change. But the price is still above the 200-day moving average, which is coming in at 591. So it's just 2 points above it. I guess we can say it's better than nothing. Hopefully that will hold. Now, you can't see it on the screen, of course, but we know that since the Qs made the April low that they made at $402, we know that the Qs rallied from that April low and traded in a really, speaking of Magnificent Seven, it traded in a magnificent uptrend to the October high up here to 637. That was a 58% rally, higher lows and higher highs from April to October, 58%. Very good. Can't argue that. Now, from the highs at 637 right here, the Qs became exhausted. That was enough AI for a little while. At least some traders started taking profits, and we came down here and dove to 585 in November, rallied back up here to 628 in December, then fell down here to this low at 600. Then it rallied back up and started walking along the 50 and the 20-day moving average through December, fell down a tiny bit, then rallied back up and made another high, back up to 636, so pretty much matching that high before in October. Then said, okay, we give up, dropped down here to profit taking came in, dropped down here to 594, then tried several times, holding that 594. The Qs tried several times to get up and over that green line, the 50-day moving average, but couldn't do it. These moving averages, people, are very tough. They're very, as you can see, they're resilient. They're lots of fun when price is trading on top of them to use them for support, but they can be a very tough ceiling if price gets below them and they try to get back through, as you can see right now. And of course, a lot of institutional investors use the 50-day moving average as a guide, so it is pretty important here. So we couldn't get through the 50-day moving average, and then slipped lower again, back down to where we are at 593 and change. So going forward, what do we do with this? We have overhead resistance here at the 20-day moving average at 605, at the 50-day moving average at 613, then up to 628 up here. We have 628 right here. And then, of course, up to 636, 637. So I'm not saying it can't happen, but it's going to be a little bit of a fight, I think, to get back up through all of this resistance, potential resistance. Now, we have potential support down here at the 200-day moving average at 591. Fingers crossed that holds. And, of course, we do have the November lows down here at 581, which could also act as potential support. So let's hope that happens. So again, we have a lot going on. Next week's going to be hectic, I'm sure. So please stay tuned and double check your protective stops. Our final chart today is a daily chart of the Global X blockchain ETF, the BKCH. We've traded this before, but I'm looking at it now for a couple of reasons. It does have 35 holdings in it. The top holdings are Iren, Coinbase, Applied Digital, Bitmine, Immersion Technologies, TerraWolf, and Riot Platforms. Now, when I captured this chart today, the BKCH was trading at $62.18, trading just below, it was actually right on top of, price today is right on top of its 20-day moving average, which is also coming in at 62 and change. And it is, again, below its 50-day moving average, which is coming in at 69, and the 200-day moving average right up here, the black line, is coming in at 71. Now, something you may not know, let me just clue you into this. We just talked about moving averages acting as resistance, and they certainly can do a darn good job of it. But when moving averages are moving down, like this 20-day is up here, that's pretty tough. That can act as pretty tough resistance. But when a moving average is moving slightly higher, as the 200-day moving average is doing right here, then it can lose a lot of its power. Because, of course, if it's moving higher, it means that price at some point had moved higher too in order to get this line moving in that direction. So just know that I totally get that the BKCH is trading below these moving averages, but the 200-day especially is moving up a little bit. And we've had some things going on with cryptocurrencies and so forth. So again, the 200-day moving average is up here at 71. Now, we do know, and what I was going to talk about, we do know that Bitcoin and many other cryptocurrencies have fallen dramatically since their October highs. And look back here. Oh dear, when I captured this chart, I didn't get that high in right there. Sorry about that. But they did since the first week in February. Bitcoin has been, this is not Bitcoin here, but since the first week in February, Bitcoin and a lot of the other currencies have been potentially forming a base. Potential is the operative word here. Back to this chart. I'm looking at this with interest because, of course, this will have a lot to do with the direction of Bitcoin and the other cryptocurrencies. But that's why I'm looking at this particular chart. I'm looking at it with interest. I haven't bought any yet, but I am watching it. Now, looking here at the Global X blockchain, and I'm sorry I cut that up over there. I cut the top off of it here. It made an all-time high in October. Everybody made an October high, it seems, at 123 up here. And then it fell down to a low down here, all the way down, sold off to the November low down here, sold off really hard, fell down to the November low at 62, then rallied back up here to 84. then came back down here to 62 to retest it. Price loves to retest where it's been before. Then came back up to 84 in January. 2 times it retested 84 there and there. Then sold off hard in February down here to 55, then rallied back up here, hit its head on the 200-day moving average. At that point, couldn't get over it, and then has been wandering sideways here between 68 and 57 and 68, so to where we are now today, again at 62. So just out of curiosity here, I'm going to keep an eye on this. I know that if Bitcoin and a lot of the other cryptocurrencies, first of all, they don't trade with the market, which is a help at this point in time. And it looks as if they might be forming a base here, just like the BKCH looks like it is forming a base here. So what I'm going to do is I'm going to watch it in the coming week if the BKCH can stay above 57, okay? 57 right here. If it can stay above 57 and if the market behaves reasonably well, we could have a sell-off, but I just like it to be reasonably orderly. I will buy a small, very small position of the BKCH in my trading portfolio, and I'm going to put my stop in down here pretty tight at 56.50. If and when the BKCH can rise up above and close above the 200-day moving average, just call it 71. If it can rise up and close above the 200-day moving average for 3 consecutive closes, at that point I will add to my position, and my stop, of course, will be a trailing stop. So you may want to keep an eye on the BKCH in the coming week. And also, we talked last week about the IGV, the software ETF. We talked about that. I glanced at it a minute ago. It's now trading at 83, and I told you last week I own a small position. I have a stop in at 80. If the market gets more volatile, I may sell before that. But we'll wait and see what happens the first of the week. Also, we looked last week at the Global X Cloud Computing ETF, the CLOU. If you got into that, I am proud to say that the CLOU is hanging in there. It hasn't been taken down real hard, so that's a good thing. So just final word here, I'm not going to go long on anything in a big way in this market until the Strait of Hormuz has been opened. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. Trade the Trend to Profits, which is right here, Trade the Trend to Profits, shows you how to take bigger profits out of the market over and over again. You'll learn how to buy a stock or ETF in the early stages of an uptrend, how to manage it as long as the trend is in place. So it's going like this, higher highs and higher lows. So of course the lows are the most important part of that, the higher lows, or at least even lows, but not lower lows. So you want higher lows and higher highs. So you'll learn how to manage your position as long as the trend is in place and at the right time, when to grab your profits. You'll learn how to buy low, sell high, and do it over and over again. Our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading to how to swing trade successfully, one of our most popular programs, again, how to trade the trend to profits, how to read chart, great for novices or anyone who wants to brush up, 3 winning setups, great for short-term traders, and how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, please, please, please be careful out there. Trade carefully, and sometimes the sidelines is a place to be. Keep green on your screen. I'm Toni Turner, and this is The Market Now.